So we've had the company, as I say, reporting a 93% decline in half-year earnings. Cadiz, a company that's certainly come under pressure over the past half year. Let's go through your pressure points right at the top.
Okay, thanks, Alishia. I think I'd like to focus on the numbers rather than the percentage. The percentage get a little bit distorted when profit margin shrinks significantly. But it's an interesting results mixed with sadness for departing our securities business that we had for many, many years. Securities has been under pressure for quite some time because of the market condition and probably lost our competitive edge in the new competitive market. We had to make a decision to go big, and we decided not to go big with our own balance sheet. We partnered with BNP. It's a very good transaction for Cadiz. The profit of that transaction actually going to materialize in the results at the end of the year. But it's sad to some way to let go of a business that we started in 1993 and was our flagship, and in some way say goodbye to a lot of good friends. If we go to our asset management, which is probably a more relevant pressure point because that's our future, the market, there are probably two areas in the asset management that made our life difficult, not just in the last 6 months. Number one is the market. The market is not the best market for investment manager, very unpredictable, and probably the events of the week can probably demonstrate that as well. But at the same time, I think we might have lost some focus on performance in certain areas. We have great performance in other areas, so what we've decided to do is to merge these two areas, the retail institutional, to focus the team, to reach economy of scale, and hopefully the great performance in some areas is going to rub off on all the areas. The lackluster results in asset management is mostly due to no performance fees.
Yeah, well, we've got that refocus happening, and as you highlighted, a lot of that pressure coming through right now from the disposal of the 60% stake that you had in the securities business to BNP Paribas. Moving forward, you expect that to reap benefit for the bottom line. Take us through, the kind of leverage you're expecting to reap from this relationship, because this is a transaction that's now officially been completed, right?
100%. The transaction was completed 31st of October, or the effective date is the 1st of November. We actually got paid the proceeds of the transaction. We have received 118 million rand cash from BNP to Cadiz Holding, and they also capitalized securities by 80 million rand. The new securities that is branded BNP Paribas Cadiz Securities. Although we only have 40% stake in there, we are bringing a very respectable, large international bank into the South African arena. BNP Paribas hasn't really traded in South Africa in this area before. We're already starting to see some of BNP Paribas clients around the world giving business to our securities.
Yeah.
So I think we're opening a door to a large client base from overseas. We also will be able to participate in the big players game in terms of liquidity. We'll have a very large balance sheet, although runs from London, not in Cape Town, behind our Cape Town partnership, which will be able to facilitate liquidity and to participate in making prices in the market. There's various other things that are very exciting. I think the most exciting thing for me is that we met them 12 months ago, and the chemistry is very good. We've been very aligned in what we wanted to achieve in South Africa and Africa. And I think the foundation is many times much more important than just the the skills behind that.
What's your assessment of the competitive landscape that you're operating in now, Ram? Because, you know, you've been struggling in recent years with stiff competition from these major overseas banks. You've now found some muscle, you know, to bring to your group. And one would assume that this gives you an enhanced competitive advantage, but still within a very difficult market where, as you highlighted, you've seen profit margin declines on the one hand and you've been hit by reduced fees already.
No, 100%. You know, if you can't beat them, join them, and the time comes to join them. In some way, it's a difficult environment because of the nature of the market, and we are bringing another large reputable bank into a competitive environment. At the same time, there is an advantage in the sense that we are a very small shop. Our cost base in South Africa of the new entity is still reasonably or very low comparing to the large banks who's got a large cost base, huge budgets to make, and you know, they're under pressure. Mm-hmm. We're starting from a very low base. We also have time to position ourselves. I don't see the market turning around tomorrow or maybe in the next year or two, which will allow us to get into the market without spending too much money, more careful, position ourselves properly. And when the market's going to turn, I think we will position very well to